Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is February 16th, 2023. We just got a slew of data coming out of the U.S., headlined by the PPI data, which came in much stronger than expected. The headline final demand came in at 6.0% versus 5.4% expected. That was still down from 6.5% last month, but still fairly high and higher than expectations. The core measure year-on-year came in at 5.4 versus 4.9%, down from 5.8%, but again, still higher than expected. The month-on-month rose by 0.7% versus 0.4%. We also saw initial claims come in at the 194,000, which was less than the 200,000. Jobs remain fairly are strong. Philadelphia Business Index, however, plunged or fell sharply to 24.3. They were expecting minus 7.4. Last month it came in at minus 8.9. So disappointment in Philadelphia manufacturing, higher prices, high employment. That's the story. And we are seeing the US dollar move higher. So let's start by taking a look at the euro versus US dollar from a technical perspective. Taking a look at the euro versus US dollar on the hourly chart, what do we notice here? Well, we notice that the high price in trading here today move higher into the European session. And what do? We found some resistance against the 200-hour moving average. In my last report on the euro versus US dollar last night, I said we needed to get above those moving averages in order to push the bias more to the upside. We couldn't do it. We saw sellers, and we saw the price move down, and we were trading below the 100-hour moving average into the PPI and the jobs numbers and the Philly Fed and housing starts, building permits, so on and so forth. And we saw the PPI come in much stronger than expected. As you can see, we're seeing the dollar move higher, the euro versus US dollar move lower. Now, the move to the downside has seen some support near these swing areas. A swing area defined by this low, these lows, these lows. The lows last week and this week all came in between the 106.54 and the 106.68. And as you can see, the low price came in right around the 106.68 level, and we are trading just above that level at 106.72. So if we were to move below those levels, that would open up the door for further selling. I would take the price of the euro versus US dollar to the lowest level, going back to the daily chart since January 9th. That's this day right here. If we take a look at the next targets on the daily chart, what would we target? Well, we target these swing areas or these swing levels through here, where we had a number of different highs, formed a ceiling, and then we moved above that level and tried to find support here, creating a low. Admittedly, in the month of January, we did see the price move below this swing area for 4 days. Here, trading above and below the yellow area, in fact, in all 4 days before moving to the upside. And if we were to move to a new session low, we would have to traders targeting this area down here. That would be the obvious next target between 105.73 and 106.15. Move below that level opens the door for the 38.2% retracement of the move up from this low to this high. That's the 2022 low price to the swing high that we saw in February. That stalled the rally near the 110.31 level. So that would be another target on the downside if this bias can continue in that direction. Again, make new lows, come through here, come down to 38.2% retracement. All that is dependent upon what happens on the hourly chart. As long as the price can remain below these two moving averages, the bias remains to the downside for the euro versus US dollar. That's the trade. That's the risk. Those are the target levels. Those are the risk-defining levels and bias levels. Pay attention to them. Let's take a look at the dollar versus yen next. And we are seeing a rotation back to the upside here in the dollar versus yen. This is the 4-hour chart. I need to spread it out a little bit. What we saw in trading yesterday was that the price moved up to this topside trend line here. This trend line connected a high from here to a high from here. And lo and behold, the high price that we saw in yesterday's trade found resistance against that topside trend line and rotated back to the downside. That was ahead of this swing area through here, where we had a number of different swing high or lows through here, broke below it, and then used this level as resistance, use this area as resistance. Admittedly, we went a little bit above it there, but then rotated back to the downside. So The 134.49 and 134.65 level would be our next key target on top side. We did this high price came in at 134.76. So really between 134.49 and 134.75-ish, let's call it 50 to 75 is resistance on the top side on further momentum. That top side trend line cuts across right near the low of the swing area near the 134.50 level. So that's our next target on the top side on further momentum in the dollar versus yen. Pay attention to those levels. Those will define the bias going forward, or define the bias going forward. So let's take a look at the 5-minute chart, see if there's any clues off of this, because we did trend more to the upside yesterday. As you can see in trading here today, that we had a more corrective price action through here that took the price below the 100 and 200 bar moving averages. We try to stay below the 200 bar moving average, you can see here, but the base against the 100 and the 200 right here just forced the price back to the upside. Ultimately, if the price is going to go lower in the dollar versus yen, one of the things that we'd like to see is the price hold resistance against the top. That would be step number one. Step number two would get back below the 100 and 200 and stay below that level. That's the only way that we're going to see a further technical selling bias for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And again, this is on the 4-hour chart because I wanted to spread it out a little bit. And if we take a look at this swing area through here, number of different swing lows through here. Got a little choppy through here, but had some levels in here where the market tried to move above is more bullish, move below is more bearish. And then in the month of February, early part of February, we did try to hold support here, then fell below the level down to our low for the year. And in trading yesterday, we found support buyers against the low of the swing area, rotated back to the upside, and then moving lower off of the PPI data and other data here we're seeing here today. So we are below this swing area between 119.19 or 91 and 120.10. So let's call it the 120 level. Nice round natural level. And as long as the price remains below that level, the bias remains to the downside. We'd be targeting the low price that we saw in early February, 119.60, and then we start to look toward the 200-day moving average at 119.41. If you recall, back here in earlier February, we did find support ahead of that key 200-day moving average. Market bounced to the upside, so moving back down toward that 119.41 level is the next key target on the downside for the sterling versus US dollar. Be aware, be prepared. We do have to get below the low price that we saw in early February, however, at 119.60 and then 119.41 are downside targets. As long as the price can remain below this swing area, the bias remains to the downside in the sterling versus US dollar. So there you have it, a look at some of the major currency pairs as we head into the new trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.